quite often get how are insurance premiums derived. There's usually sort of have this vision of someone sitting in an office, an actuary, coming up with a calculation as to how someone is a greater risk than someone else, because insurance is built on statistics. Probably the main example I always like to give to my clients is, I talk about one of the first cars that I had. I grew up in the western suburbs of Melbourne. I had a lowered VN Commodore, I had 17-inch wheels, I had an exhaust. Now, there's a fair chance that being in the western suburbs of Melbourne, I was going to drive down Calder Park Drive when I first got my licence and drive like a hoon, which most people sort of did in the western suburbs of Melbourne. So statistically, my VN Commodore was going to cost more to insure, which it did, cost me a bowl. As I moved down the road to a different suburb, insurance was cheaper because there's less people that have VN Commodores in that suburb. Now, all insurance is the same. If you're cleaning windows on a skyscraper and you're a smoker, unfortunately, I'm sorry, your insurance is going to be really expensive. Now, if you're an accountant and you're a non-smoker, there's a less chance of you becoming TPD and it's going to be cheaper. There's some of the things that impact insurance premiums, ironically. As much as it's more expensive for clients, it's more important for you to have the cover because you're a better likelihood of claiming. So there's some of the tough conversations that we have.